What's Making Headlines? Your weekly wrap-up of the biggest news stories in the Australian mortgage and finance broker market.
Hello and welcome to What's Making Headlines, your weekly wrap-up of all the big things happening in the mortgage and finance broking space. My name is Ben Squires and I'm the commercial content writer at The Advisor, filling in for my editor Annie Kane, who's on leave this week. It's not just me this week though. Joining me today, as always, is my colleague, The Advisor's senior journo, Will Paige. Will, how's it going?
Yeah, good, thanks. Been a good week. Still on a bit of a high from the Lions winning last weekend.
Yes, that's right.
Yeah, how's your week been?
Yeah, not too bad. Yeah, pretty busy, but I feel like I say the same thing.
There's always a busy week.
Every week, but yeah. And are you going to the next Lions game, or is that
No,
still TBD?
I'm still kind of weighing up trying to get a last minute ticket, but
Yeah.
I'm conscious I've spent so much money on rugby this month. I desperately need to
Who's
chill
got
out.
that? Who's got that rugby budget sort of tucked away? But I don't know. It's probably been good to see.
Oh, well worth it. Yeah, I could easily see myself trying to get a ticket tomorrow.
Yeah.
Yeah, I've loved it. Yeah, you up to much this weekend?
Not too much actually. Yeah, I think it's going to be pretty rainy as well.
Yeah,
in Sydney. So
wet one in Sydney.
yeah. Sound like the saddest podcaster in the world, but I'm sure our listeners, to get up to something interesting.
Yes.
Yeah. But yeah, as we sort of said, it's been a pretty busy week here in terms of news. One of the big stories was inflation data from the Australian Bureau of Statistics, and they put out its latest consumer price index data this week. You covered this story, Will. What did the data show us?
Yeah, so new inflation data, and this is for the quarter, so one of the big ones that the RBA looks at. The headline, so underlying inflation, and this is the measure that the RBA specifically looks at. They want to get it within that 2 to 3% target range. And underlying inflation fell to 2.7% for the June quarter. So that's down from 2.9%, slightly below estimates. And yeah, so edging towards that mid-level of the target range the RBA wants to see. Kind of predicted, but interesting. Obviously, there's the two things that RBA always talks about when setting the cash rate is first inflation and then employment. In terms of kind of drilling into the data a little bit, so price rises for new dwellings, they were up 0.7%. Rents were up 4.5%. Insurance up 3.9%. But they all slowed over the year, which helped obviously the headline figure to ease slightly. In terms of what it means for the cash rate, obviously broadly supports the case for the RBA to drop rates when they meet in a couple of weeks' time. All the big four banks forecasting a rate drop, and they all essentially said this kind of gives weight to the argument that the RBA will cut rates. The Combank described it as the new data rubber stamps a 25 basis point cut in August. Interesting data that probably supports a cash rate cut.
Yeah, that seems to be the consensus in terms of the reaction we've seen from the economists and that kind of thing. That being said, last time
we said this a month ago.
Everyone, it's sort of pretty much banked in a cut.
Yeah.
So I guess when's the next meeting? The next meeting's pretty soon, right?
A couple of weeks, yeah.
Yeah. So everyone will be watching that pretty closely. But I think,
I guess the one thing that could change is all the talk around US tariffs, which I think the deadline's coming up like the next couple of days. That could impact it, but I think based on inflation and employment, the market is saying there'll definitely be a cut.
Yeah. That'll be very interesting, and it's definitely one that borrowers and as such brokers will be following very closely, I think.
Definitely, yeah.
Slightly different news for our next big story of the week. We had a new announcement from APRA, the prudential regulator, in terms of how they sort of structure their regulatory framework. So we found out this week that APRA will be shifting from a 2-tier to a 3-tier banking regulation model with a new categorization of banks as either large, which would be the major banks, medium, which would be significant financial institutions, and small, which would be non-significant financial institutions. And what APRA wants to do is, or is aiming to deliver with this categorization, is a more sort of proportional and nuanced approach. This follows recommendations from the Council of Financial Regulators and the ACCC, which sort of highlighted the need to enhance competition for small and medium-sized banks without sort of compromising financial safety. And it would also what they want to happen is for it to simplify compliance and supervision. APRA Chair John Lonsdale said the changes would allow more targeted regulatory requirements, which would reduce the compliance burden for smaller players and sort of encourage diversity in business models. APRA also announced it would streamline and clarify the bank licensing process to make it more efficient, aiming to give high-quality new entrants a better chance of success. And there would also be improvements to risk accreditation. The internal ratings-based IRB risk modelling approval process would be simplified and made more transparent, as it is currently, according to APRA, a sort of time-consuming process with limited capital benefits. There'd also be greater transparency on capital adjustments. APRA would improve how it communicates Pillar 2 capital requirements, responding to industry concerns about a lack of clarity around supervisory decisions. Interestingly, despite some sort of calls from the industry, APRA has sort of rejected proposals to lower minimum capital requirements, stressing that its core responsibility is maintaining financial safety and stability, not really offering reforms that it describes as merely a nice to have. So APRA also signaled it may tighten macro-prudential controls, such as limits on riskier residential lending, if lower interest rate environment leads to a rise in high-risk mortgage activity. So yeah, I think the headline is you're trying to make processes a bit more streamlined and easier, while sort of creating an environment where there is competition for consumers.
Yeah, and the tiered approach does make complete sense. Even, I know, I'm not sure if they said it or not, but from a regulatory point of view, it will also save money.
Yeah.
Having the three kind of divisions, in the same way that auditing, the bigger the company, the more stringent the audit, and then I think it's like a micro audit for smaller companies. It makes complete sense that the regulator has more time and money to deal with bigger issues, I guess.
Yeah, I don't think there's anything too controversial in all that. And I think it's sort of, driving better outcomes for the consumer, which is what they're there to do.
Exactly, yeah.
Perfect. So we're going to take a quick break right now, but when we come back, we'll be talking about a new broker platform from ANP and a couple of exciting announcements from one of Australia's biggest aggregation groups. We'll get into that after this message. All right, welcome back to the show. Now, we had a big announcement from one of the big lenders in Australia, ANP, this week. Will, you covered this story. What did they announce?
Yes, so they've unveiled their new broker platform. They've kind of teased it for a while. We have covered it previously. They've had a pilot program with brokers for the last few months, but this was kind of the formal announcement of the launch. It will be rolled out to all ANP brokers and aggregators from the 14th of August. And essentially they just went into what's different about the platform and how it can benefit brokers. So in terms of the key features, upfront income and expense verification, upfront credit policy checks, quicker ID verification. Loads of it was based around, with all the broker feedback, kind of cutting out common pain points for brokers and customers. And a lot of that's to do with kind of all these checks. They want to just get as much information as possible upfront before dealing with the actual loan itself. I spoke to Melissa Christie, who's ANP Bank's head of lending origination. Really interesting to kind of hear her view about what sets the platform apart. She said the key thing for this is the focus on verifying as much information as possible upfront before brokers actually submit. No one else is doing that, she said. And I guess in terms of going forward, they're still kind of making adjustments with broker feedback, which is quite interesting. So an active approach. I also spoke to Paul Herbert, who's ANP Bank's head of distribution, and he basically said the platform, the feedback had been really good. Going forward, they were open to making changes or adding new features, further down the line. Nothing imminent, but I think they had the ability to go further with new changes. So yeah, I mean, really interesting to hear about the platform and loads of new kind of tech for brokers and. Interesting to hear the features. Yeah,
this has been like a sort of common theme we've seen a lot of recently. And I think what a lot of these tech platforms are trying to do is not really replace the things that brokers can only do, but rather make some of the annoying parts of their day-to-day life a bit easier, if that makes sense.
Yeah, I think like manual checks and some of the admin, just making it quicker, easier. and then freeing up time for them to do the more, the human touch that brokers actually. That's probably where you'd go to a mortgage broking in particular. You'd want to speak to someone over the phone or in person.
Yeah, 100%. And like AMP said, it's sort of taking broker feedback on board, seeing what works. And as these things evolve, you sort of see how they're going to be used and how they can be used better, and that kind of thing.
And that's another thing that I think we've seen that a few times this year, where rather than just launch, they develop it with brokers. So they use broker feedback kind of actively. Yeah. And then so they speak to them up front about what issues do you have. They use that to build the platform. And then as they're rolling it out, they make adjustments based on broker feedback, which makes complete sense.
Oh, 100%.
Yeah.
In a similar vein to that, we ran a couple of stories this week from major brokerage Aussie, which is part of the Lendy Group, in terms of what they're doing in the tech space. So one of these stories was written by Annie and involved an interview with Lendy's Chief Operating Officer, Sebastian Watkins. And he was really talking about a range of new sort of artificial intelligence technologies that Lendy Group is going to introduce, which is going to kind of change the way their brokers work. In terms of not replacing the broker, but kind of assisting them with tedious tasks such as emails, admin, marketing, coding, product development, and that kind of thing, and sort of freeing them up to focus on relationships and acquisition, and something the customers will benefit too from having sort of more ready access to brokers. So they sort of described it as moving to rebuild the business with a sort of agentic framework, and sort of employing new tools like the Broker's Bible and Scenario. Is it Scenario?
Yeah,
Scenario. So. Rolled out to sort of act as conversational AI BDMs and help brokers navigate lender policy, servicing criteria, and scenario modeling quickly and naturally as well. As I sort of said, this sort of create some gains in terms of productivity and customer experience, improving speed, accuracy, and service standards. And I guess the anticipation also is that customers will soon sort of expect this kind of service level as the norm rather than the exception. So Aussie is kind of getting on the front foot there. One of the things Sebastian sort of said in the interview, which was really interesting, he sort of said whether it's helping design a web page, helping write code, helping build product, whatever it may be, you'll see that there'll be an AI or agentification of all these processes right from the start to the finish in our business. So they're really sort of embracing this with two hands. And it's a big part of sort of the evolution of Aussie that we've talked about quite a bit.
Yeah, and I think loads of brokers kind of leaning into AI with, we speak about like the efficiency and the manual, because there is a lot of data. There's loads of kind of, traditionally, that would be a massive part of a broker's job, would be the back and forth collecting information.
Yeah, 100%.
But yeah, AI is, so good for kind of making that process smoother and quicker.
Yeah. We also ran another story from Aussie this week, which is part of its sort of find, buy, own transformation. It's deepening its partnership with real estate agents, enabling a more sort of integrated home buying journey while staying focused on lending. So Aussie has partnered with one agency to provide its 750 agents access to Aussie's property marketplace, CRM integrated lead systems and bridging loans solutions, which is designed to create a more cohesive ecosystem for property and finance. Aussie also announced it is launching new services like Seller Assist to help agents identify vendor leads and offer free property listings on its platform to boost exposure and reduce agents' advertising costs. So plenty of things happening.
Yeah,
plenty of announcements. But always sort of interesting to see what these businesses are doing and how they're sort of tinkering with the model to drive a better outcome for brokers and their customers as well. So we're going to take one last quick break right now. But when we get back, we'll be talking about new data from one of Australia's biggest broker associations, plus a big appointment at one of the major banks. We'll be right back. Welcome back. Now, another interesting one this week came from a release that was put out by the MFAA. Take us through the announcement, Will.
Yeah, so MFAA announcement that they've grown their membership to more than 16,000. So that's the first time it's been more than 16,000, record for the association. That's actually up 9% over the last 2 years, which is quite substantial growth.
Yeah.
MFAA CEO Anya Panik, she said that growth in the last year had actually been the strongest over the last 7 years. So obviously growth accelerating. She said, as the industry continues to grow to meet the demands of consumers and business owners, it's pleasing to see the immense trust brokers are placing in the MFAA to be their voice and represent their views when talking to government, regulators, and other key stakeholders. Yeah, it's interesting. It was the growth rate that actually surprised me, because you think it's already from quite a high point. The fact that it's accelerating I thought was interesting.
Yeah, that's massive, and I guess that suggests more brokers are coming to the industry, I suppose.
Yeah, and I think that probably ties in with, the trend we're seeing that more people use brokers now.
Yeah.
And obviously the MFAA, was it last week, they launched their kind of university level qualification, which would be interesting to see uptake on that. An interesting trend.
Yeah. And I guess, as the population increases, I suppose the need for brokers increases as well. But we talk about this so much that broker market share is at such a high level at the moment, and more brokers coming to the industry. I wonder what's the where the number is eventually going to land, or whether it's going to.
So what it's in terms of the number of people that use, is it 76 at the moment?
Yeah, it's around that. Yeah,
I guess 80 is the next benchmark. I actually looked at the UK recently. That's in the 90s.
Really?
Yeah.
The
US is less, but it'd be interesting to see, because I always kind of thought 80 would be the ceiling.
Yeah.
But there's no reason why I guess it couldn't go higher than that.
Yeah, it's always been one of the big things that sort of surprised me, sort of coming to the business and learning a bit more about the industry, just how many borrowers go straight to brokers. It's like 3 or 4. But I guess they just must be seeing the value there.
Yeah, 100%. But it surprises me that the 25% of people that don't use a broker.
Yeah,
I think,
exactly.
why wouldn't you? It makes complete sense. Yeah.
Yeah. But yeah, it's very interesting to sort of see record numbers as well, and I guess it's good for the industry too.
Yeah, exactly. Yeah, really good for the industry.
Yeah. And just to round out our stories for this week, we had an appointment story at one of the major banks. So we found out that Adam Croucher, former CBA executive, has been appointed as State General Manager for Westpac and Bank of Melbourne's broker business in Victoria and Tasmania. Croucher brings over 20 years of experience to the business, including general manager roles at Westpac and including general senior leadership roles at CBA and most recently a growth-focused role at Pepper Money. And in the new role is sort of lead broker relationships and help shape policy, process, and technology improvements across the southern states. So Croucher replaces Suzanne Wood, who was recently promoted to head of home lending at Westpac, and it continues this sort of. We've seen a few senior leadership changes at Westpac within Westpac's broker team this year. So Westpac's head of broker distribution, Sarah Wilsallen, said the bank is really focused on becoming a market leader in third-party lending at the moment, and praised Croucher's deep broker ecosystem knowledge. Very interesting times. Shifting from one major bank to another, but it's always interesting to see these big appointments, I think.
Yeah, and I think the amount of appointments Westpac have made this year just in their senior broker team's interesting.
Yeah.
Interesting to see if they make any more.
Yeah. Will, thank you so much for joining me today to run through some of the big headlines of the week. To our listeners, if you enjoyed that, make sure you read all the stories, get all the details, and let us know if there's anything you'd like seeing or hearing that you think we should be covering here on The Advisor. You can always reach out to us directly at editor@theadvisor.com.au, and it'll eventually come back to us. Otherwise, we hope you have a fantastic weekend, and make sure you catch us next week for another episode of What's Making Headlines on the Advisor Podcast Network.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.